Hello traders, my name is Tomasz Wiśniewski, I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. Without a further ado, let's start, and as always we start with the macro calendar. We need to see what is going to happen in the world, and what will be the most important data for the traders and what happened yesterday. First, let me show you the filters here. All right, so yesterday we had PMIs from US, which came much better than expectations, and this is helping the American dollar to climb higher. Also had a speech from Jerome Powell, event that helped the dollar bulls. As for today, we don't have any crucial data. Only PMIs from Canada can be influential for the Canadian dollar. As you can see, trade balance data from Australia did not help much the Australian dollar, because the Australian dollar is very weak right now and is going down, but that's after the statement and the interest rate decision, which remained unchanged. It's mostly caused by the statement. And remember that tomorrow we do have non-farm payrolls, but the thing is that non-farm payrolls is not so important anymore. This data was important few years ago when we were having a recovery after the recession, and everybody was wondering how the recovery is doing. Is job market expanding? But now we all know that the recovery is, let's say, accomplished. We do have interest rate rises, actually to cool down the speeding economy. We have ultra low jobless rates, and unemployment rates, as you can see, 3.8 in United States. That's super low. That's very close to like the lowest number achievable. Good for the economy, because you can go obviously lower, but those numbers close to zero are not good for the economy, because companies will have problems with finding good employees. With that being said, let's move to the charts, and on the charts we'll start with the instrument that we mentioned on the Trading Sniper video. And first I would like to show you the American dollar to Japanese yen, because the pattern situation here is very, very interesting. So what we are having here is a correction equality pattern. 1, 2, 3, 4, 5, 6. So we got 6 corrections in a row. Well, 5 are already finished, and those corrections had like 45, 50 pips, more or less. It's not a pharmacy, so you can have a difference of a few pips, but those rectangles are the same. As you can see, this correction was a bit smaller. This one was a bit bigger. This one was exactly like this one, because I took the rectangle from this correction. And here we are waiting for the same correction again, for the 6th, the same correction in a row. And what is interesting is that the price getting there will in the same time touch the midterm dynamic support and the horizontal support here created by those highs. So this is a very, very good place for a bounce. In addition to that, if the price will create, for example, a flag, we will have a trend continuation pattern, and this should result with a bounce. Let me show you the flag. Maybe if you don't see the flag, its flag is in an early stages here, and here. It would be nice to see the continuation of this movement. So price getting there to the upper line of this formation and then to the combination of those supports, and from this bounce, a breakout of the upper line of this formation, and the price going higher. Next instrument I have for you is Bitcoin, and Bitcoin is in a long-term descending triangle. As you can see, we have a horizontal support, super important, crucial one, $5,800, $5,900 for one Bitcoin, which is with us since February. Actually, is with us since October, but was proved as a decent support, as a crucial support actually, in February, and every single bounce from this support is smaller. So we had this one, this one, this one, and two most recent ones are flag formations, and every new bounce is smaller. So we had this and this, and every bounce is aiming the downtrend line. So this is a very, very technical formation, technical movements. So descending triangle, bouncing from the support to the resistance, from the resistance to the support. So if this movement is technical, what should we expect? We should expect price respecting rules of the technical analysis and rules of the price action, and going actually lower. Also, in addition to that, we do have this horizontal resistance, 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 support, resistance, support, resistance, resistance. So we should expect the price respecting price action principles, and price action principles are telling us the following: that we should bounce from the blue line, break the lower pink line, and aim the yellow area. We already tested the yellow area 4 weeks ago, 3 weeks ago, and maybe we'll have a breakout this week or maybe next one. But the breakout of the lower pink line and the price aiming the horizontal support is more or less certain. Obviously, there are no certain things on the market, and you should be aware of that. But there is a high chance that we will break the lower line of the flag and test this horizontal support. Now, Australian dollar to Swiss franc, which is in a long-term downtrend. Downtrend correction, downtrend correction, downtrend correction, downtrend, bigger correction. And this correction is a flag. And we broke the lower line of the flag at the beginning of the week, actually yesterday, in the middle of the week. And we broke the horizontal support here today overnight. This horizontal support was important, very important, because you could see a reaction here, a hammer. So you could see the price respecting this line. But this line got eventually broken, which gives us a legitimate sell signal. Most recent H1 candle is a hammer. Hammer is promoting a further rise. It wouldn't be nothing unusual, because the broken support needs to be tested as a resistance, and price getting there and creating a price action reversal pattern like a shooting star or a bearish engulfing will be a legitimate signal to go short. Those were the instruments that I mentioned on the Trading Sniper video. Now let's analyze those instruments which I talked about in the previous daily analytical report. And this is, for example, euro dollar. And euro dollar, we can change this. Yes, this is the ultimate support resistance for the euro dollar currently. We broke this super important support, and now we are going to test this support as a resistance, and we broke 61.8, so those Fibos are no longer relevant. Why is that? Because Fibos, they show you the trend correction, but this trend is over. Now we have a new trend, so there is no reason to check the corrections of this trend if it's over. We have this horizontal support, so previously it was 115.30, now it's 115.10, because previously it was a bit higher, but now we need to adjust this support to the most recent price swings. And you can see that the price this week respected 115.10. Broken support, and you can see a reaction here as well. A broken support is about to be tested as a resistance, so we are expecting like 15 pips upswing, and then a bearish price action here and a further downswing. Actually, in my opinion, the sell signal is on as we stay below this line. I traded this, I opened this on my live trading account somewhere here. Position is already on break-even point, a lot of pips. That's one of the best trades recently, and I'm absolutely calm about this, and the price should continue to go down. The first aim should be lows from the middle of August, and after a small correction we should get there. Nice setup is on the cable as well. On the cable we do have this breakout of the lower line of the channel up formation, then the price creates a flag, then goes down, flag again, goes down, flag again, goes down. Now we do have a correction, but the thing is that as long as we stay below the pink line is here, as long as we stay below the pink line, the sentiment is definitely negative, and we should continue the decline towards the lows from the 15th of August, which should give us almost 300 pips, 280 pips. So if you're not in hurry, if you're a long-term position investor, going short on cable seems like a reasonable idea. Sell signal will be denied when the price will break the pink line and then the yellow horizontal resistance. But as long as we stay below this resistance, this one and this one, there is a full legitimate sell signal. And there is also this horizontal line, and actually even you don't have to wait for this yellow line, because for example the price getting there will break the horizontal resistance, dynamic resistance, and trigger the double bottom formation. So price getting there is a buy signal even before breaking the yellow line. And now Australian dollar to American dollar, and this setup makes me very, very happy, and this setup is the best. Why is it the best? Because I was telling you that for many times previous week and this week, that from all the pairs, all the instruments that I have for you, the situation on the Australian dollar to American dollar was the most technical one, and the sell signal here was the most reliable one. Short recap, because it's not about bragging about our good call, it's about you remembering this kind of setup. Why was this setup strong, and why we perceived this setup as a super important one and reliable? Well, we have a long-term downtrend, and the price is making lower lows and lower highs, and the price is respecting long-term downtrend line. Most recently we bounced from this downtrend line, and the price created double top formation, and the second top was a shooting star. Shooting star on a daily chart bouncing from the long-term downtrend line is a super strong sell signal. So we had this double top, but this correction was shaped like a flag, and in addition to double top, we broke the lower line of the flag, which confirms the sell signal. Then we broke this horizontal support, we tested this support twice as a resistance, and then the price created a pennant and broke the lower line of the pennant. That is another confirmation. So how do you think why we had a drop like this? Because every single factor was bearish, so there was no doubt about that, and every single trader in the world was seeing this. Because sometimes there is a consensus and there are a few bearish factors, few bullish factors, but from the technical point of view, Australian dollar to American dollar was extremely bearish, and most of the traders saw that. So this is why we had a drop like that. Let me put this resistance back on the chart again, and this kind of drop, this is absolutely huge. This is 130 pips, which in case of Australian dollar to American dollar is a lot. And now we do have a correction attempt, let's say attempt, because the buyers were trying to create something here, because we are in a long-term horizontal support. Actually, as you can see, we are making new lower lows. We had those lower lows in the beginning of September, so today we are on the lowest levels since February 2016. And in case that this green line will be broken, the next horizontal support will be here, so lows from 2015 and lows from 2016, which gives us, let me show you how many pips, quite a lot. A breakout of this green line gives us another 170 pips. Obviously, I'm not even thinking that it will happen without a correction. Most probably, we need to correct this movement. Let me show you the daily chart. We're having 4 bearish days in a row, right? 4 bearish days in a row. 1, 2, 3, 4 correction. 1, 2, 3, 4, 5 correction. 1, 2, 3, 4, 5 correction. 1, 2, 3, 4, 5, 6 correction. 7, 8 correction. So it's it's not very often that we see this kind of movement and then without a correction. It is very probable. So a drop here, price aiming this line, then another drop. Very probable. Now WTI oil, which is making new long-term highs as expected. We are expecting that since here. Why? Because the price created inverse head and shoulder pattern. We broke the neckline. Then after this, we created a pennant. We broke the upper line of the pennant. Pennant is a trend continuation pattern, so it brought us a further upswing, aiming the horizontal resistance here, upswing, then a correction. We tested the resistance as a support and the price went significantly higher. Gold. So gold is still respecting this lower line of the pennant. We had this breakout, which was a false breakout, and the price went higher, but buyers lost a bit of momentum. Here they bounce from the horizontal resistance again. And the thing is that, okay, we do have a demand for gold because this one happened with a stronger dollar. But as you can see, the stronger dollar is a factor which is negatively affecting gold still. So with a stronger dollar, and that's what we are expecting, a stronger dollar in the long term, it will be very hard for the buyers to pull the price of the gold higher. So long story short, as long as we stay below the green line, the sentiment is negative. We don't have a buy signal on gold. Maybe not negative, but neutral. Portals, and then correction, upswing, correction, upswing, correction, most probably a further upswing. American dollar to Canadian dollar, here we are in a bit of a correction mode. So let me show you the situation in the short term, because the price is aiming the horizontal resistance here, and traders are accurate. Look at this, here, and here. So this rectangle is 2 pips wide, so the price is respecting this with great accuracy. It's like pharmacy, right? What are those rectangles? Those yellow rectangles are the correction equality patterns. Again, quick reminder, correction equality. We got a flags, breakout of the lower line of the flag brings us a sell signal, sell, sell. Now we do have a correction because the price wants to test the broken support as a resistance. This line is a consensus between those lows and those lows and those lows. But the most important line is not this blue line, but this horizontal one. Bearish price action here will give us a strong sell signal, and that is the long-term signal on this instrument. There is a long-term negative sentiment for American dollar to Canadian dollar. Canadian dollar to Japanese yen denied head and shoulder formation. They failed to break the neckline here, so there was no sell signal from this formation, but instead of that the price broke the horizontal resistance here, dynamic resistance here, and is aiming higher, and that is a proper buy signal, proper long-term buy signal, because the price should aim this orange line, which in this case should give us 260 pips. But as I said, opening position now is not the best idea on the record, because we do have a very weak risk to reward ratio. So potential profit is almost the same as potential risk, because stop loss should be here, 260 pips, 250 pips profit. That's not very good. But the price declining here, testing this support, broken resistance as a support, and then bouncing here would be a nice buy signal. And then you open long position here, stop loss or here or below this bounce, like 120 pips, and then you have 360 pips profit, 3 times bigger profit than the loss. And this is the risk to reward ratio, which is at least worth considering, but for me this risk is worth taking. Australian dollar to Japanese yen. Here the price is aiming the broken resistance. This is this broken resistance here. We're gonna test it as a support, and a very interesting situation can be created here. So a bounce from this line will create a legitimate inverse head and shoulder formation here. Left shoulder head, right shoulder, boom, an upswing. Also in addition to that, downtrend line. So breakout of those two lines, downtrend line and the neckline, can be a very, very bullish factor. So I showed you the gold, and now I will show you silver, because silver seems like silver entered the uptrend, because the price making higher highs and higher lows. This movement is not very technical. Maybe this one is, because it's a nice uptrend correction, uptrend correction, uptrend correction. But I don't see a reversal pattern here, to be honest with you. It's more like a trend continuation pattern. So a downswing correction, beautiful triangle, downswing correction, beautiful flag, downswing correction without a shape, shapeless correction, but still a correction. So even despite the fact that we broke the downtrend line, the sentiment on silver, I think sentiment on silver remains negative. Let's see if the situation changed on DAX. Not so much. We are still on a downtrend here, lower lows, lower highs, but the price defended this neckline of the head and shoulder formation. but there is no proper trading signal on DAX. So that being said, let me check if there is a trading signal on the S&P 500, and there is not yet, or maybe it is, because the price is breaking the uptrend line after reaching new all-time highs. That is an ascending triangle pattern. It should result with a bounce from this line and an upswing, so that may be a denied formation which will bring us even a bigger drop, and that can be possibly very, very dangerous. About the horizontal supports, yes, well, we had this one, but it got violated recently here on 27th and 28th, so we need to adjust the this to the current situation. Here, this is the support. So the thing is that yes, we broke the uptrend line, that's for sure, but we are still above the horizontal support, and as long as we are above the support, we cannot say that there is a full sell signal on the S&P 500. Let's check the rest of the instruments. American dollar to Swiss franc. Let's see this one. It's one of the majors, but we still did not analyze this instrument, and that's a comeback inside of the triangle, which instead of resulting with a trend continuation resulted with a reversal. There is an important horizontal resistance here. Very strong uptrend, V-shaped reversal, very strong uptrend, and this should be continued, but that's not the strong setup. I don't like it actually. From the technical point of view, and New Zealand dollar, Japanese yen as well. Let's check New Zealand dollar to Swiss franc. Well, almost exactly the point, on point. The price is also respecting this line with a great accuracy. Let's copy this line and see if there is a nice flag. No, there is not, but there is a more of a wedge. Yes. It doesn't matter really. In a flag and wedge in a downtrend, what matters is the lower line of this formation, not the upper line. So I bet you saw this setup already. No? So let me show you the Australian dollar to Swiss franc. Looks similar here. Okay, wait, here looks very, very similar. Let's check the downtrend line though. Even if we go like that, that means it was a false breakout, which should additionally strengthen the sell signal. So yes, on New Zealand dollar to Swiss franc, we do have a nice sell signal. Also look this resistance support, and broken end here. Let's see where it will go. You can see a demand here, maybe we'll have a correction and then a drop, but this setup looks interesting, very, very good. Okay guys, let me do a quick recap for you of the setups that we have. Euro dollar short-term buy, long-term sell. Cable short-term buy, long-term sell. Australian dollar to American dollar, sell. Oil, buy. Gold, unknown. Dollar index, short-term sell, long-term buy. American dollar, Canadian dollar, long-term sell. Canadian dollar, Japanese yen, long-term buy. Australian dollar, Japanese. But again, I'm telling you about the directions, but it doesn't mean that there is a trading signal, because you always need to think about the profit, potential profit, and the potential risk, about the risk to reward ratio. Always, if you win big. If you lose small. Here nothing. Here short-term sell, long-term buy. Long-term sell Bitcoin, Australian dollar, Swiss franc, long-term sell. S&P 500, that will be interesting, no signal. And New Zealand dollar to Swiss franc, that is a long-term sell signal. So thanks very much for attending the daily analytical report. For more trading occasions, our views on the market, visit our Twitter account and our website alpari.news.